The crypto markets are getting crushed right now, and many are confused and lost on what to do during these hard times. Either you have an investing plan which you're following, or you're waiting for the markets to go down even more so you can start buying. But the problem is, how do you know when the bottom will be? What price point will this be? What should you buy, and how you should be doing this, is the million-dollar question on everyone's mind right now. Let us tell you this though. There are many people out there who regret the 2018 bear market, and I am going to try and show you exactly why in 2018 the markets dropped so heavy. The markets dropped heavy during this period. Bitcoin went to a low of 3,000 from around 19,000. Ethereum went from $1,400 to $85, so many people gave up on crypto as there were headlines all over the place that crypto was a scam and it was dying a fast death. But those that believed in the future of crypto just kept buying more and more during this period, and when the bull market started, made a lot of money. WiredX will try and make sure you're not one of those people who have the same regrets and take advantage of this crypto bear market, so you can enjoy the gains when the markets do recover. Hi guys, this video is brought to you by WiredX. Please like, share and subscribe for more informational content. We will keep sharing invaluable information to keep you updated on what is happening in the markets, and share that information for free. In return, we only expect you to support us in this endeavor by subscribing to our channel and following us so we can improve the quality of our content even further and help you towards your financial freedom and educate you in the process. Right, so moving on, in this video, we will be sharing our investing plan for this crypto bear market. Let us jump right into it. The first thing you need to do is to sign up on an exchange to buy crypto. Even though there are plenty of options to choose from, but the top three currently are Binance, Coinbase, and FTX. These exchanges have the lowest fees which are hard to find elsewhere. Once you have signed up to one of these exchanges, the next step is to figure out how much money you can set aside for crypto-related investments till 2024. As an example, let's assume you only have $1,000 to invest in crypto. Now, some people may be thinking, $1,000 isn't enough, but trust us, it is more than enough to start your journey towards attaining generational wealth through crypto. First, we'll look at a low-risk investment strategy followed by a more high-risk, high-reward strategy, the content of which will be covered in subsequent videos, that involves investing in a set of altcoins other than Bitcoin and Ethereum. One of our favorite strategy to invest is to do dollar cost averaging into the crypto markets and lump sum investing when market dumps. Dollar cost averaging is also called DCA, where what you're essentially doing is that you're buying the same amount daily, weekly or monthly, no matter how the market is doing, and lump sum is where you buy a bigger piece of the pie when the markets drop heavy. In this strategy, we will only be buying Bitcoin or Ethereum, or a combination of both, because history tells us that thousands and thousands of crypto die out during a bear market, but Bitcoin and Ethereum are the two constants who always make it out of it. So, we are going to look at only these two coins for the low-risk investment method. The first thing you need to do is take 80% of your $1,000 and commit that towards dollar cost averaging. So, you can split that 800 into half and commit 400 each for Bitcoin or Ethereum. Now you split that further into 12 months. This means that now you will be investing $33 per month into both Bitcoin and Ethereum. You can do that at the start of the month, middle of the month, or at the end of the month. The goal here is not to look at the price of the coin, but making that investment regardless. We know crypto is volatile, so the markets will go up and down, but investing with the market means that you will have multiple buying zones, which then means you're not sticking to one average price, but instead you buying every month will ensure that your portfolio is taking in the average price of a whole year, which allows you to manage the volatility in a much better manner. Now you may be wondering, why did we take out the $800 and invest it monthly over a year and leave the rest. We are going to talk about what you should do with the remaining $200 at your disposal. This is the amount that we will use for lump sum investing when the markets drop big time. So you'll be keeping that $200 aside till the market crashes. We have already seen plenty of market crashes. So instead of the $33 that we set aside monthly, during big market crash, we will be using a portion or all of the $200 set aside to buy. For example, you may buy Bitcoin and Ethereum worth $50 or $100 during periods of crashes. Capitulation is one period we would keep some amount for because during capitulation, markets fall anywhere between 25 to 50% in a matter of weeks. This capitulation has happened in 2018, then back in 2015, and even before that. But the markets don't only drop during such times. There will also be other times when the markets drop heavy due to any adverse international news and/or event, so when that happens, you would put that $200 to work by buying a bigger amount than your monthly average. This strategy will truly keep you in the thick of things because you buy monthly but also buy big when everyone is busy selling due to the crash. So you'll be happy when the markets go back up and be happy to buy the dip if the markets go lower. This is one of the safest risk management strategies out there that you can use to safeguard your crypto investment and make it big when the bull market returns. This is it today from our side. We'll be sharing another video which will cover a high-risk, high-reward investing strategy. Please make sure to like, comment, and subscribe to our channel. Over and out.